All right. Let
Let's
me do the
see.
intro, Marcus.
Yeah.
All right, guys.
That's
Well,
good.
welcome in. Welcome in, guys. Sunday, June 1st. Hey, first of the month. First of the month. I wasn't ready for the song, but hey, it's the first of the month. Welcome in,
There you
guys.
go.
Sunday, June 1st, 2025. Welcome here to ETM Trading Sunday with Marcus Morpheus McKinney. I'm head out of the G Money Pies, and as always, right, these calls are for educational purposes only. So any trade idea or suggestion, it is trade at your own risk. And obviously, we are part now of the Yes or Yes Academy. So, Marcus, welcome on board, man. Welcome on board to the next ride. Hopefully, this was going to be a lot longer, man. This one was just little baby rides, and but
Hey, well,
the team and I already had those conversations. And obviously, we're just here.
there we go, man. Well, it's good stuff. Well, like I say, welcome to the session, everyone. And with that being said, glad to see you all here. And we'll get going. We'll get going. This is ETM Sunday with Marcus Morpheus McKinney and Gerardo G Money Paez. So would I be in violation if I say COC? COC?
No, no, absolutely
COC?
not. Absolutely not.
You know, you
Yeah.
gotta throw it, you gotta put that in.
And just on that note, guys, so obviously we have our inner circle WhatsApp group, right? That's gonna be our intimate circle. Our Sunday sessions will continue kind of more on the private level, in that inner circle, just to kind of keep the group small and focused. However, once a month, right, we will do a class in the COC live community, and most likely it'll be this one, Marcus, the ETM Sunday, just so we kind of reach out to more people, make sure they can, they know and are aware that the ETM supply and demand strategy is something that you and I do.
All right.
That's kind of the plan, once a month. Obviously not this one, right? Not this one, but once a month, we our Sundays classes will be broadcasted through the Yes or Yes Academy, and then the rest of the other Sundays for now they'll just be our inner circle, right? To have that smaller group. But over, man.
There we go. There we go. All right. Well, for those of you who are have been here for a while, been with us, and those who are new again, welcome. But we always, start off our session with our intro and kind of get the mind going, you know, first, right? We ask ourselves this question, what is the matrix, right? And I believe, for better or for worse, that it's becoming more and more apparent these days. Some of the layers are being peeled back, if you will, right? And we like to say that the matrix, is a system of control, a system that would seek to place perceived limitations upon us, right? Affecting the way we see ourselves and we interact with the world around us. But here at ETM, we want to develop the understanding that we can transcend those perceived limitations and become the best traders and best people that we can possibly be, right? That's kind of the overall idea and theme, right? We know that there are matrices, I'll put it that way, multiple that exist there, or let me step back. There's one really matrix, but many layers, right? You break through one layer just to, kind of enter another one, right? And as long as we have that understanding that, every level that we break through, right, on our path, that there are going to be, new challenges, introduced, kind of like, a video game, if you will. Back in the day when play video games that had levels, right? I don't even know if they have those type of games anymore, but when used to play a video game, first level, you fighting the challenges, whatever enemies were out there, and you get to the end and you got to fight the boss for that stage, right? So conceptually, right, I don't think life is that much, different from a conceptual standpoint. When we're young and we're on early levels. We have certain challenges, things you have to be overcome. Maybe you have this big challenge that you're facing that's big in your world or at that level. You have to overcome that. And um, when you do, you move to the next level, so on and so forth, right? Till you meet the final boss at the end. But each time there's, strategy and things that have to be done in order for us to advance and break through and move to the next level, right? But again, it's all part of a, system of control. And when we become aware of that and we decide to step outside of that system or begin to look outside of that system and want to move outside of that system, even in the way that we think and we approach life, trust me, you're going to face challenges in a different way. Right. But that's what we're here for in terms of trading and in life to a certain extent. We want to realize that we can transcend or traverse those obstacles and barriers and move to those different levels. Right. But part of that understanding, at least to from our perspective, is understanding the truth about it, that there is no spoon.
Absolutely, man. No, yeah, thanks for the intro there about what is the matrix. And yeah, just very interesting, man. So I was gonna just add a little bit in there that, how we just, when you get out of the 9 to 5 space and, you go to another opportunity. You think you're out of a matrix, but in reality, we're like you kind of mentioned, you're in a different level matrix as well that has its own system of control. And at the end of the day, man, it's just, obviously we have this free your mind sessions towards the end that we can always connect it to. But when it comes to training, guys, right, um, the we always this was kind of our major breakthrough when it came to the market, right? Understanding that the market is fractal, right? The what is fractal about the market visually is the technical analysis, the price action, right? They're patterns that are built, and those patterns repeat themselves on different scales. So as here, right? So a fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. So, a lot of times, right? Um, there's strategies on different time frames, but if the market repeats itself, our strategy should also be fractal, right? Should also be fractal and repeat itself and do it all over again. For example, like the 1, 2, 3 entry strategy, that one we can use it the same from any time frame, and it's really helped a lot, right? But to us, right, here's the most important thing. We cannot bend the market or the spoon to our will. We only seek to realize the truth that the market is a constant flow of opportunity based on your perspective. And I think right there, man, the perspective part is really important. I had a few meetings with some students this week, and a lot of times I was hearing their perspective on what they see, right? And there's some patterns that may come out to me more obvious than somebody else. And so it's just like, that's what's really important. And to me, right, trading doesn't have to be that hard. It's just okay, will price go up, will price go down? And then from there, the only thing we have control is our entry and our risk management. But yeah, there's always opportunity in the market. And but most importantly, right, find your perspective of it. Because if you find your perspective of it, you'll start seeing it more better with clarity. But moving on, man. Excuse me. The Our teaching here for these Sundays ETM classes, we want you all to get to the point where you say, I know Kung Fu, I see these ETM candles, but mastery through repetition, right? So Tommy, so when you know those simple movements so well that you can perform them without thinking, you are free to pay attention to more advanced details, right? But we really believe, right, with these ETM candles, they're very, very simple patterns, three candlestick patterns. And if you start seeing them, you can literally just trade ETM candlesticks, and that's it. You know where to get in, you know where to exit, and you know where to take profits, period. Right? But again, though, right, as we evolve, our brains want more, our brains grow, or they want more knowledge, and then we start layering on top of there, those those advanced details. So we have a great system that teaches you all this. So we'll go ahead and teach that today. But most importantly, right, that that mindset. That mindset is the key to success in everything. It all is the key to success in trading. So Marcus, let's close out with this mindset moment, man. Free their
All right.
minds.
Hang on, my computer's messing up. Okay.
You got it? There he
Oh,
goes.
oh, sorry. Now I gotta go back. I'm fumbling. All right. So yeah, there's something very interesting about trading, right? We get into the space, um, we see the opportunity or the opportunity is introduced to you. If imagine go back to, before you knew anything about trading, right? That it, even existed in terms of a way that was, accessible or something that you wanted to explore, a road that you want to go down. Think about that time. You know, what did you believe about trading when you began? What were you told about trading, right? If you look back down that road, back to then and connect it with where you are now, do you feel the same way, right? Do you see it the same way, right? Everything that you earned and been through, the wins, losses, how has that changed you, affected you? That's nothing you have to answer now necessarily, but unless you want to, but that is a good thought exercise in my opinion, right? And one of the, consistent, things that are a challenge or present themselves as challenges in trading, right? And I think it's more of a human nature thing, if you will, as opposed to anything else, is that, we are looking for certainty, right? There's a quote that says, we're looking for part of a quote that says we're looking for certainty. We're certain certainty doesn't exist. And here it says doubt is not, a pleasant condition, but certainty is absurd, right? And because there's no way that we can know everything, right, in life or in trading, and I think trading is an excellent, in many ways, as a microcosm or teaching about life skills, values, understandings, mindset. And one of those is that there is no such thing as certainty, or that faith on the to some degree, to some measure, is inevitable, right? Because there's no way that we can know everything. There's no way that we can
Mhm.
ascertain, understand, um, properly process every single variable at any given moment, right? And but we trade, right? We take trades and we want that level of certainty in our trade, whether conscious or subconsciously, right? We want to know what the outcome is going to be before we even begin, right? Before we hit that button, buy or sell, yeah, what's price going to do, right? How far is it going to go? And then we start to imagine, well, if it goes here, I can make this much money. But if I do this lot size, I'll make this much money. All these different thoughts that really, in the grand scheme of things, if we really are able to calm our mind, all of that is really irrelevant. Where is price going to go? What is it going to do? How far is it going to go? How much money am I going to make? It doesn't matter, right? What matters is that, do we see an opportunity? Do we have a framework that allows us to engage in that opportunity? And by chance, if it doesn't go our way, what am I risking? Right? If we can ask ourselves those three questions every single time, what is price going to do? I mean, not that. Do we see an opportunity? Do the conditions exist to engage in that opportunity? Do we have parameters for that? And how much do I stand to lose? Right? Those things. If we can ask ourselves those things every single time, then we can at least put ourselves on a better path, right? Because as I put down here at the bottom, right, and said, don't chase your dreams, walk your path and build them, right? And that could be kind of, what does that mean? Let me, I guess, elaborate just for a second. We're always told to chase our dreams, follow our dreams, right? And so that is implies that there's something that's, you know, running away from us, right? If you pursue or you chase something that's running away from you, right? And if our dreams and we live life like that a lot of times, like our what we desire is running away from us. So we take, these desperate actions, or we maybe not desperate actions, or we move in a way that we feel like, time is running out and I'm not going to get it. I'm not going to get it. Right. Whatever it is you think that you want. Sometimes do we even stop and we move so quickly, do we stop and ask ourselves, do I really even want what I'm going after? Right. Because if we really want what we're going after, right, there, and then it takes on a different shape. Obstacles look different, challenges look different, right? But imagine if you're, building a home, right? Or just say a house, right? There's, a foundation, you put up, structure, walls, got to frame it out. Yeah, electricity, plumbing, everything has to be ran, and you close it all in, insulate it, roof it, cover it. Then then the house is complete. Then you have to fill it with everything else to make it a home or whatever, right? But when we walk our path, we think that the even either consciously, again, subconsciously, that the end result has to look like someone else's result, right? And yes, you can build like cookie cutter homes, everything looks the same, right? But that's really not life, that's not reality, right? And when we are walking our path, there's a process, right? To even um, building our dream or whatever that is, there's a process to it. Yeah, every house needs a foundation. If it doesn't, then it's not going to last very long. Every home needs or house needs a good frame structure that's sturdy, that can stand. It needs all the things, plumbing, electricity. Every home needs certain things, right? But every home is not going to look, the end result is not going to be the same in terms of what it looks like on the outside, but it's still going to provide the same things in the end, right? It should provide a place for rest, peace, comfort, a covering from the elements. So, but we get inundated with a lot of things in this day and time through various medium that make us feel like we have to pursue a certain image of a lifestyle, or even not pursue it, but present it so that others will see us in a certain way, right? And that keeps us on this, potential, hamster wheel of pursuit and chasing something that in the end we may not even really want. And trading, in my opinion, has to a certain degree been pushed into that space, right? Where it's become to some degree a consumer product, right? And not a skill to be learned, which may not be a popular opinion, But here at ETM, Eugene and I have had many conversations about this, and which is why our words and our thought process have grown over time. But by and large, we've been pretty consistency, in our pretty consistent in our stance that this is a skill to be learned, um, and to provide a format where that skill can be learned, in a way that makes sense to help you make it make sense for yourself, right? Because you have to build your home, proverbial home, the way that you want it to be built. But at the end of the day, there's a process that we have to go through to get that result. Can't change that. But if we can see that, we can understand that, we can operate that way, then hey, then we can free our minds. Gee, let's go.
100%, man. No, appreciate that for that, man. No, yeah, these sections here, man, just a good reminder, man. Just a good reminder. Everybody here is having bringing some great are grateful for these sessions. I am too, just to kind of slow the pace down and just take a moment and reflect, right? Reflect on, because trading is a vehicle. Trading is a vehicle that can help us, and it also keeps us on pace with the evolving world of AI technology, YouTube, and so forth. Right. So I would say, right, that the trading space, when you bring it just pure trading, not too much technology, right? It's one of those vehicles that does help us move forward. It's also an opportunity to share, and it helps, Instagram, you there's a lot of people out there who are content creators, right? And they just been, like 22 years old, he just made so much money, right? Well, it's hard to learn content creation. We've been doing videos all this time, and for me, it's still a big learning curve to post and share on YouTube, right? Like I don't even know how to go live on YouTube, right? And I could if I took the time and there, but again, everything is a learning curve. Anything worthwhile, it is a learning curve, and trading is that. And I'm just glad that we can just relay that message, right? There is no shortcut. There is a learning curve, but most importantly, right, with anything, we're not going to have success if there is no mindset there, guys. But yep.
Right.
All right. So yeah, man,
Good stuff.
let's go ahead and change the pace there. If you guys are ready to go, we got about 40 minutes to wrap this up, and we got a good session here for you guys. I want to make sure that uh, stop the share, man. Oh, can you stop the share, Marcus? Oh, never mind, I got it.
All right.
There it is. All right, guys. Well, let's go ahead and kick it off. All right. So welcome you guys to ETM Supply and Demand Cheat Sheet, our cheat here where you can learn how to read these ETM candles. We're gonna find a lot of examples of this today. I'm actually gonna go in the structure part of this, but right, this is where it all begins, right? Supply and demand, and quite simply, right, when when sellers are in control, right? Prices are going downwards. When the buyers or demand is in control, prices are going up, right? That's simple, right? We got to find who's in control, right? Where's the trend? Where's the momentum or the direction? That's our very first clue because that first step, and again, this all goes back to your perspective as well, right? Oh, I see it this way. Well, I see it this way. And something that, when we see an impulse, right, low to high, it's an impulse that can be considered controlling direction. But when we see a pullback, right, that could be the start of a new trend, and we won't know until the new pattern completes, right? So what I meant to say by that is kind of here is like using the perspective aspect of things is like, okay, you know, what's your perspective on control? What's your perspective on direction? I may see the push up. Marcus may see this as the start of the new impulse because of other, other confirmations. At the end of the day, right? We don't know who's going to be right or wrong. It's just who can manage your entry with your stop loss and risk management, and whoever wins. There's no one, there's not a better strategy than others. It's just more about, I was able to see an opportunity and I took it. Okay. So just back to here, right? That's what the ETM candles come in, where it's like um supply, look for sales, demand, look for buys, look for your control, look for your direction. And again, from there, right? The equilibrium is where we enter your entry and exit. So the equilibrium is what's known as, our a fair value price based on that impulse, based on that control and direction. And it usually starts about halfway, right? The 50%. So that's the concept of it. The ETM candles helps us do the risk management of it. The ETM candles are it's a three candlestick pattern, three bullish, three bearish. The BEC, the Brother in Gold candle, the drop base drop, and the break of structure candle. They're all the same except the rally base rally on the demand side, or the rally base rally just simply goes up and so forth. But these right here, have give us everything, right? Give us our entry, our exits, our risk management. Something I kind of been taking note on recently, right, is the risk to reward ratio, right, or reward to risk ratio. I got this backward, I just realized. But the reward, right, for beginners, I think starting off a 1-to-1 is good because we need to build that stamina. Once you get consistent with that 1-to-1, 1-to-2, intermediate, right, and then 1-to-3 advanced, and they can let those trades run, right? Let those trades run. And as I'm saying that, Marcus, this actually reminds me of like, when we first started off trading, right? And all the knowledge that we came across, it's like if you don't get a 1-to-3, what are you doing? Remember that?
Right. Oh yeah, oh yeah. I mean,
Wouldn't you say that's a system of control as well, man? Just a quick thought on that, right?
um, ye- in a sense, right? When it's not moderated, and it can become that way when you just, follow it, blindly, right? But, I can see, from a mathematical standpoint, you eventually want to get to, looking for opportunities that can produce that. But that information back then, at least, yeah, it was presented that way. And I don't recall is just, the understanding in terms of, okay, this 1-to-3, it's not always going to hit, right? Or it could take a minute and there's going to be ups and downs with it, right? So there's a certain mindset that you have to, develop. You got to kind of grow into that to be able to, wait that 1-to-3 because, sometimes it's going to, boom, it's going to hit right up very quickly. But sometimes it may take a minute, especially, imagine if you're on even the 15-minute time frame,
Yeah,
right? And you enter, if it takes 7, 8 candles to get there, right? It's gonna be 2 hours, right? And if you're not, you know, fortified, you see price going up and down, and you're just glued to the screen for 2 hours, that's not gonna be sustainable over time, right? And so the 1-to-1 is not a place, like how, G has it laid out. 1-to-1, you have to, over time, you got to have a very high
right.
win rate, right? In order to like remain profitable, right? But you're not doing that to remain there, right? You're doing that to, okay, let me, begin to establish myself, in this space because I'm going to risk the same amount, right? The risk is, as you can see, is remaining the same, but we're moving up in terms of developing our patience, our eye, so that we can allow the trade to move a little bit further, but we're still risking the same.
Yeah,
So but again, when we're chasing them, these imaginary profits, these windfalls every trading session, we're going to try to skip over all of that, right? And every trade becomes the trade. and you don't give yourself a chance to develop. So, yeah,
Not a good point there. Yeah, it's just like, in the past, a lot of people were at 1-to-1, right? And they didn't know what to do. They didn't know what to
right,
take profit. Like, oh man,
yeah,
I'm moving my stop loss to break even now and let the rest run because I gotta get that 3-to-1. And it just if you don't have that experience, right, in trading, it's you'll go come back and break even and you feel like you lost, because
right,
I
yeah,
was already at 1-to-1. I could have took profit there, right? So that's the whole thing, right? I think just
yeah.
our message is to say, we just give you some flexibility,
Hmm.
just to kind of understand things.
Got to develop.
There you go. Yeah, but we'll chime in on the ETM candles more in detail on the charts. I do want to just kind of bring in the structure part of it too, right? And again, right, everything flows back to control direction, entry and exit, and risk management. It really all does flow back to that, right? And with structure or with impulses or waves, the ETM candles or the ETM strategy and review, it's all the same, right? So with structure is in the mix of things, right? This is the N wave, right? The famous N wave to the downside right here. So you have 4 points. You got your high, you got your low, you got your lower high, and your lower low. I try to focus on mainly on these four moves, and then once we get another low, I just shift down and keep walking the waves. Now, once you get that fifth wave, you're starting to get the what do you call the LEA wave, but this is just mainly just focused on these structure points. Just like the ETM candlesticks, right? There's different types of structure. There's equilibriums on, excuse me, when it comes to structure, right? You got your break and retest, right? So you have or we still even call this A, B, C, D, okay, where you have the push down, the pullback, and the break of this low, and then the equilibrium literally becomes the break and retest of that point right there. You wait for it to come. Thank you, Joe. You wait for it to get there, and then you go back down. Okay. So what is this equilibrium zone? Like what's in this equilibrium zone? Well, you can fib it. Sometimes there'll be those that percentage level. But a lot of times, right, it's gonna be those ETM candlesticks in some shape or fashion and some time frame, right? It's gonna be the ETM candlesticks up here in these. So you may have a BEC somewhere there. You may have a drop base drop. You may have a break of structure candle right in that zone. And that's kind of where we always go back and change time frames and look for that, right? We know where our high was. We know where this first low. We know where the lower high is and the lower low. You mark those points up from a 1 hour time frame. And then from there, you kind of just change time frames and look for the anatomy of the candlestick in there of the ETM candle, right, to give us that clue. So this is a break and retest example. The order fill, as we're calling it, right, a lot of times price comes back into that very same area, kind of creating those equal price levels, and then it goes lower, right? And then it goes lower here, right here, right in this area here. That's where we'll find the ETM candle right there. So the order fill is simply because it needed a lot of bank orders in this area to really push the price downwards. And then last but not least, right, a liquidity grab, right? You got a high, you have a low, you have a lower high, and a lower low. Price is pushing up, pushing up, pushing up. It passes the break and retest, is pushing up now toward the order fill. And the next thing you know, right, it goes up and takes out this high right here. And what happens here? People are starting to call this a what? A shift or a change of structure and so forth. Okay, they start calling that a shift or a break of structure. Okay, what is it actually forming? If you guys see the pattern now, okay, it's literally forming a harmonic, and this is a bearish pattern. So this is also where the break of structure candle comes into play. You have to break two highs. You have to break two highs in order for you to really be a break of structure. Okay. So what does that mean, right? So as we have it here, right? This is high number one, and this is high number two, the lower high. You have to break both of them to get a structure shift, right? So anytime price goes in there and takes out that first high only, or the lower high, it's literally setting up for a potential nice move to the downside. Okay, back down. All righty. Any comment there, Marcus?
No, it's a definitely good breakdown on the structure there. Just gotta have the patience to wait for those things to play out, right? And as we often emphasize that the only thing that we can't control in these scenarios is our risk, right? There's no guarantee that even when the structure is presenting itself in that fashion, the price is going to do these exact things, right?
Absolutely, man. Absolutely.
Probability.
Yep. And then so again, right, the the bullish end wave structure is the same, just in reverse. So here now we'll focus here on the risk management part of it, right? Where do you put your stop loss? Well, we don't know if it's going to be a break and retest. We don't know if it's going to be an order fill or a liquidity grab, right? But regardless, right, the break and retest, usually the stop loss is at a low. You're looking for buys, your stop loss goes at a low. Well, you have two options, right? We have low one and we have low two. Okay, well, in order for us to measure our stop loss, we need to, our risk management, excuse me, we have to know our entry, okay, and our stop loss level. So, okay, maybe it's too far of pips between the entry and stop loss one. So in this scenario, I'll put my stop loss right here, right? Right here. So that's the entry zone, equilibrium zone, stop loss there. On this one here, right on the order fill, okay, price is coming in too many times, maybe, to the entry, right? It's coming way too many times to the entry that you want to give it some room. When the order feels like this, sometimes price just hovers there for a very long time and then it takes off, right? It takes off. So where could you put your stop loss here? Well, you can still put it at the low one, excuse me, low two. This is low one and low two. But you can give yourself some room there. You may find another ETM candlestick right there as well. But again, where does your stop loss go? At a low. At a low. And then last but not least, right, the liquidity grab one. Because you see the momentum, the drop happening pretty fast, comes for this low, or the stop loss for this one will be, the initial push down here. Okay, this will be the stop loss. Alrighty. So that's how that works. In this sense. One thing that I actually want to add that just kind of came to mind is that, I'll show this here in a second. It's reminding me of it. So we have bullet structure here, right? Impulse, correction, impulse. And if price actually comes in and takes out that low, does a pullback. You see that? Takes the low and does a pullback. And it comes back down and price doesn't turn there. And it actually also takes out this low. What's going to happen when you take out that low, guys? If it did a pullback here, right? It's still going to do a pullback to the top side, right? So it breaks the structure. That is a head and shoulders as well, Dr. Latrice. It breaks the structure. But what happened when it broke structure one? It pushed up. It made a higher high, but it still pushed up. Okay. When it breaks structure one, the actual thing, it breaks the structure, and then we may get an aggressive pullback. So all I'm saying though, right, is that because of this original structure still being bullish, right? And if we're in a live market and you get stopped out around right here, because structure, because where price would likes to turn, we could still be bullish a little bit more because we see it a lot of times that when price takes a low, it pumps up. Price takes a low, it pumps up. Okay. So
I
if I see an example on that, I'll make sure that I'll share with you guys.
money. You money.
Is that you, Namaya? Go for it, man. You try it on me if you can.
I wanted to ask a question regarding the liquidity grab. Are you classing that as a wick rejection? So let's just say news or just high volume where it wicks and then pushes up past your stop loss for liquidity grab, or you talking about a candle that actually closes in that breaker structure form and then pushes up?
Yeah, so in this example here, right? Anything that goes slightly below here, right? Even a
Yeah.
wick or candlestick, it does take the lows and it pushes to the top side.
Okay.
Okay.
I think that's a good
Does that make
question.
because
I think usually what you're going to see in most cases in that area, right? If price trades below, that where he has it marked, then normally with the liquidity grab, if there's liquidity there, you're going to normally see an immediate rejection,
yeah.
right? In most cases, right? Now, if price is closing below there, right, and it's not pushing away, but then the next candle pushes up a little bit, that could be, an indication that, hey, there's not really that much volume at that price level to keep price going in that direction, right? So that either means it could have more potential to break and go lower, or maybe, consolidate a bit around there if the volume isn't there.
Okay,
Man.
so that is more around like wick rejection then at your that equilibrium at that zone that was marked. Yeah.
Yeah,
Yeah,
I guess,
so
yeah.
yeah, go for it,
I
Marcus.
guess
Sorry.
no, yeah, I guess you're pulling up an example here a little bit.
Yeah, I'm trying to look
Uh,
for an example here on that because I do want to focus on structure on it. And regarding obviously structure is fractal, it repeats itself over and over and over again. So I didn't go into that detail there in the mind, but maybe this helps, right? This is actually a clue that I got from a friend of mine, not a friend of mine, was for a student, right? Which is a friend as well. And the higher high is very, very important. Our mentor, right, Mr. Shout out to Mr. Curtis Cobain. Is that his name, right, Marcus? Our fit mentor.
yeah, yeah.
Yeah, he was
That's it.
part of another group when we first started out. The one that taught us the fib, how to really play it. So he had a rule, right? He had a rule when it came to, um, I don't even know what line I want to use. There it is. He had a rule. Every time he measured the fib, excuse me, every time he measured an impulse, low to high, okay, um, he did not consider, you know, let me put it like this. Oh, thank you, Drew. Okay, like that. And let me remove the extensions for now. Okay, this right here is not a valid fib. Why is that? Right? Um, Price has to at least touch or close a bit below 23%. Right? Only then, right? Only then can you establish that as a high. It's got to give you a retracement to at least that 23%. If it doesn't, and then it shoots back up, well, then you got to extend your fib. Correct me if I'm wrong, Marcus. That's correct, right?
That is correct.
Okay. And then so you got to extend your fib. You can't count that as a high. You got to count that. All right, perfect. So now the next move does come and it wicks into the 30, 23% or here, right? And then price pumps back up. So with that, being said, if there's a rule for the retracement, a valid higher high also has a rule has to also be established. And after a few back testing, a higher high is not complete. And the TP1 for me is negative 0.18. Okay. TP1 for me is negative 0.18. TP2 is the negative 272 extension. But if the price, even though we made a higher high, if the price does not touch 272 and it only touches negative 18, I don't readjust my fib at all anymore. I keep it at the same low and the high until it gets up there, right? Until it gets up there. That's where I consider it. So a lot of times, them that's the reason why we can't consider everything the low and we can't consider everything like the liquidity grab simply because of that rule. All right. And I'll show you an example right here. Hopefully this works. But Ethan, there are markets that I don't think we talked about that one, but yeah, I've been back testing that a lot, man. Where like if it doesn't hit the negative 18, we treat it, it just if even it wicks at it, I keep the fib the same. And a lot of times, man, it's coming back, right? To about maybe 38%. And then it actually does go back up to the extension. And then from there we keep it moving.
Yeah, I mean, price does. I'm not gonna say strange things, but there are very. I mean, there are no absolutes, right?
Right.
There's no absolutes, but what we have to look at, even in this example here, um, where's my?
I'm actually going to mark up here and here just so we can be on the same page. Right there. Yeah.
Hang on, I'm looking for my. I don't
Pin.
have my pen. Yeah.
It should maybe go to more. It should be there. Show annotators. Oh, hold on. Huh? No, it should be on. Annotation should be on.
It's weird. Nope, I don't have it.
Let me see if we press this button.
But the places that you're marking up, the first uh, area there, the first dot, that the first high on the left right there,
Mm-hmm.
we can see the previous or the high before that. It's probably started to make its way down. And if we looked on a lower time frame, the structure will look different. But
There, right?
where it broke that previous high, right? Price traded up above it, but it rejected it immediately, very strong at that point. So there were, that is a example, a small one, but an example of an area of where there was liquidity, right above that high, where okay, there were still sellers, right, on that side of the market looking to push the price down further, right? There was orders to be filled or whatever have you, right? But it wicked above that, a couple of, one, two, three previous price points, see, that were high, excuse me, at least, I'm sorry, two previous price points that were higher. I wish I had my pen, I could mark it up.
Yeah, I'm trying to see what's going on.
Um, but price pushed up again against two previous price points that were higher, two smaller wicks, but there was still supply above that, right? Or if you want to look at it this way, as price was moving down, people who who were getting in to sell, they had stops above those areas, right? And price goes back up to those stops, those orders get closed out. Those contracts can now be picked up by a bigger fish, if you will, and price continues to move down. And after that, you can tell by the series of bearish candles that proceeded after that wick. After that candle closed, price really started moving more aggressively to the downside. Prior to that, very choppy, you know, but it's just going lower. So those who are impatient, they get in, orders are coming in, price is going to sell, price shoots back up very rather quickly, and then almost an immediate rejection back to the downside. And then it moved aggressively to the downside. So,
Come on, right here, right? Yep, perfect. Yeah, and actually, that's the recap that I was going to go, man. Yeah, I don't know what's wrong
uh,
with the pen, man. That would have been perfect. That would have been perfect. But yeah, so this hopefully answers your question too, Nico, with the where to start and your fit. And again, though, right? This is where that 1, 2, 3 strategy is very important, right? And it's the most important thing. Where's your high, right? Find your high and your low. Find your range, and that's where you're going to consider your trade, right? There is no, universal answer for it. It's okay. I see a high here, I see a low here. I'm gonna fit that, and I'm gonna make my decision based on that range. And that's how simple it can be, right? There is no benefit. Anything that I draw here, any trend line that I draw, right, it doesn't exist in the chart, right? It doesn't give it any volume. It's just me drawing up something and drawing up a probability to trade. So if we just focus on these dots right here, okay, we can't call everything a structure, right? We cannot call everything a structure break or lower low because it's everything measured. So if this impulse goes down, okay, and we get a low, price pushes up, it meets the criteria that it went below 23%, which is good. So it is a valid impulse just based on the rules that we set. Okay. And it goes to 38% and it goes down. Here, it made a new low, correct? But it did not even touch negative 18%. You guys see that? And then price went up, hovered around a little bit there, and then went down. And now it touched negative 18%. But again, this is just my TP1. I'm putting a rule for myself and back testing it that we have a valid lower low if we touch the negative 272. And look what price did before what Marcus was saying. Look what price did before it touched it. It went back up to 50% and then it went down. Now we have a valid lower low. Okay. Now we have a valid lower low. So all of this right here, guys, was just noise trying to distract us. Okay. Noise trying to, I will not move my point from here either. I'll keep it right there. Keep the same fib from high to low. And I was still bearish on Friday from this point. It came in and wicked it perfectly right at the 50%. I think Dan says he sees a harmonic. I'm sure Dr. Tree sees many W's in there, right? And yeah. So that may be one thing, NEMS, that could probably help you, right? And just getting it.
I just want to ask you a question, yeah? Because this is something which is structurally I want to really master now even more. So are you guys saying that to validate your first impulse, it has to touch the 0.236 first?
Yes.
Yeah. Yeah. And then if it touches that or the 0.38 and then get a wick rejection, that is now confirming the first type of impulse that I can now say, okay, now I can start looking for sales potentially.
all right, hang on one second. I just want to make sure we clarify when it pulls back, the valid pullback. it needs to close above or below, depending on direction of price or the Fed, um,
Okay.
beyond that 23.6, 23.6. So you need to get a good close in that, beyond that level.
Yeah.
All
So
right.
there's the
And once,
impulse
yeah,
names. There
Mhm.
goes the price. There goes Wix to 23%. We get a
yeah,
nice little close there,
there you go.
right? That's we can on this time frame, we can call that a okay, we got the pullback. Okay, maybe at some point, right? Like this, look, maybe at some point we're seeing this as the impulse. And again, the right, we haven't gotten a pullback yet. All right, so price goes a little bit lower. Okay, so see how it wicked it, but it
Hmm.
didn't close. But so
Yeah.
yeah, just keep it moving, keep it moving. So then we gotta also move the fib with it with that low. Okay, went just a little bit lower, and there it goes. Now that's valid. Now that's valid. We got at least a pullback. We let price breathe a little bit, and then from there, right? Um, you know, 38%. We can start looking at some sells from there. At least the first attempt to sell.
Okay, so I'm glad we're going through this then because what's catch me out a lot of times is this type of play here where I go, oh, drop base drop, and then I see this accumulation period happen, and I'm now going, and I've taken it before and then ended up losing, but then actually it was still selling. So really and truly now I just have to wait for 0.2 or 0.38 to really close and then reject down to confirm that small little impulse up to go down, correct?
Yeah, so yeah, and again, this is kind of this will come back to the levels that
Okay.
in the ETM candlesticks. So for example, like once we got this impulse down, right? That's where we kind of go to our ETM game, right? We go to our ETM game here, and these dots won't change, the fib won't change, right? And let's see what we can find just on there. Let's see here. So I'm only focusing in between the what do you call the two dots, guys. That's all I'm focusing in. I'm just focusing on between those two dots, and I'm trying to see if I can find an ETM candle right in there that will give me some confirmation to do that. So we got our impulse, we got our pullback confirmed, and let's just kind of check in between those two dots. And here goes, Nico. Maybe they can help you out. Once you made a decision from your high and your low, and you're focusing on sales that day, if you start going to a bit different time frame, we can start seeing different things. Now this is a high. Now this is a low. Should I fib this? And it's just okay. Today I'm picking sales for X, Y, Z reason. Okay, that's it. X, Y, Z reason. Here in this area, it doesn't even look that we should be fibbing there, right? And but we started it from the 15-minute. That's the decision we're gonna take. I think we had a NYSC box in there that helped. So, okay, you know what? I'm gonna see what kind of ETM activity we have, right? In between my what I consider my high and my low. All right, we do have this little BC looking thing up here. So, maybe we let price come to 61%. Let me mark that down. It's 30 minutes. 1 hour, nothing really there in the hour between the dots. Okay. And 2 hours. Perfect. One second, guys. Right. And okay, you know what? Going to the higher time frame is not going to help too much. Okay. But now check this out. This is goes where the madness comes in of the just fibbing one candlestick, right? It's not exact, but this fib right here is almost just like we're measuring that one candlestick, right? So just FYI how everything gets connected,
Yeah. And
right?
G, you mentioned something, a minute ago when you start to, just think about this, you know, ladies and gentlemen, when we do change time frames, you're essentially changing perspectives, right? And with a different perspective, you can get, a different story, right? Say for instance, in a legal case, right, you have witness A that says, "Oh, well, the market was definitely selling today, right? It's going to sell, right?" That's the 15-minute witness, right? You go to the hour witness and said, "No, think we're, definitely going to buy." You go to the 4-hour witness and then saying something else, right? So every witness is going to could possibly have a different perspective, and likely will. I mean, they're going to have a different perspective, and they could be telling a different story, right? We increase our chances when those stories are corroborated or they line up or they agree, right? Every time frame saying, "Yep, looks like sales, looks like sales, looks like sales." Doesn't guarantee, but increases our probability. And so when we are, because we've been trading gold, and obviously gold has been extremely bullish. So when you look at higher time frames, it's going to say it's bullish. Everything else right now is a pullback, is a correction. So when we start digging into these different time frames, kind of got to keep that in mind that, if everything else is a correction, if it's not, you know, bullish price action. And even if you were looking for buys on lower time frames, you'll be looking at buys in the midst of a higher time frame correction that's occurring when you look at the 4-hour and above.
Absolutely.
So, so that doesn't mean you can't trade. You just have to proceed with that in mind, I guess is what I'm saying.
Good
Right.
stuff, man.
But yeah, ladies and gentlemen, I gotta run, got some stuff to handle this morning. I think G's gonna
Yeah.
continue for a little bit, but
Yeah.
always good, and we'll be back again. So until next time, see ya.
Steven. Appreciate you, Marcus.
Yes, sir.
Yeah, we'll go here about another several minutes, guys, and we'll wrap it up. Just make sure we respect Marcus's time there, and I'll be done as well, so I can respect your time. Appreciate you coming here, Marcus. So in this example here, guys, right, the impulse is down, the Fibonacci levels are there, okay, and this is where price gets tricky, guys. It really does get tricky. And let's just say, based on the 1, 2, 3 strategy, I found my high, I found my low, I fibbed it. Man, my entry is at 50%, stop loss at 78%, and take profit here, okay, at those zones. And just look how look at the whole thing, right? Price goes to 38%. And this is where the important thing about it is, and not to be moving that extension and that fib so quick, right? And, price came, does that, makes the lower low, but it didn't make a lower low at all, right? Because the little wick there never touched 272. Okay. And then I think we had some news event here shortly. It took a while. Took a long time. There it is. Then it touched that negative 18%. And look how well, I was asleep during that time, 2003, because this is London time. So I won't even be awake during London time. It touched that negative 18%. And look what happens the moment it touched it. It goes right back to that 50%. So a lot of times, right, whenever we see these lows happen, we start following that structure, right? And that's where you really do get liquidated, right? But if we follow this rule with the fib, right? That's the high, that's the low. I'm not moving this fib until we touch the 272. And I'm still biased on my sales right there. I'm still bearish on my sales there. My bias is still sell at this zone. And we had a very, very clean drop base drop right here, which when you start seeing those ETM candles a lot, they help. And then price continues, and then does that, and now it touches the 272. So now I can move my fib to that point, and my low and my high to those 2 points. And now I can readjust myself from this high to this low. And because these candlesticks already, right, were above 23%, that is a valid impulse to measure, right? And I think, I stayed away from, I gave you guys a setup for Friday on gold, but in reality, just last day of the month as we mentioned, right? Um, last day of the month, and just was that's the next setup right there. That's the next impulse. That's the next X wave. Price did get there, hovered around there a few times, and it looks like it wants to turn around. Looks like it wants to turn around. But yeah, I want to make sure you guys see that structure there. Any more comments there, Nems? Make sure I got your question in there. Yeah, but backtest that, man. Backtest those impulse and corrections, and
I just have one more question. I just have one more question. When would you class it to be invalid?
one more time.
When would you class it like that, using the fib where you don't decide that, all right, this trade is is not going the direction that I want it to go? When do you class it to be invalid?
Okay, and then that's where the 23% comes in.
Okay.
Okay, because the 23%, it's either going to be, let's say, for example, you entered here, right, at 61% and price starts coming down, or
Mm-hmm.
and it won't. Let me rephrase that. That's where the fib levels come in general. Okay, you get in at the 61%, it does hover there for a while. Hey, if there's enough momentum and volume, we should smoothly go to the 38%, right? And if price
Mm-hmm.
gets stuck at 38% and then goes back up to 50, like, oh man, you know what? This thing's gonna potentially turn. Let me go ahead and break even, right? The
Okay.
23% is the strongest one, though. It is the strongest one out of all of them. And let me show you guys this example here. Like the Monday night, Tuesday and Wednesday, all I looked for sales that morning. I did miss the powerful buy, but I shared this Elliott wave with you guys, I believe on the chat, and we had the 0, 1, 2, 3, 4, 5 right there. Okay. And that's the full Elliott wave. It meets all the rules, right? It meets all the rules. 0, 1, 2. 2 cannot go lower than 0. Check. 2 to 3 has to be your longest wave. Check. 4 cannot go into the vicinity of 1. Check. And then 5 can go wherever it wants. All right. The moment it completes that, we're gonna get a ABC correction pattern. As another ABC pattern. Before I knew Elliott waves, right there, you get some kind of pattern like that at least goes down to the point number 4, at least. Okay. So then once you have a full Elliott wave, you can also fib this Elliott wave like so. So if I'm thinking sales, guys, okay, if I'm thinking sales, where will be my first take profit here? Okay, based on this impulse, well, the 23%, right? And then my second one will be 38% because I know those levels are, you know, they're important, right? And we literally look for sales to how I look for sales. I speculated sales, excuse me, to it. And there it is. You see that? And then from here, it touched the 50, gave us a big push up. Now, if we zoom in just a little bit more, okay, and maybe, right, some of you guys see this low and this high, which is valid, right? That we have an N wave right here creeping up, impulse, correction, impulse. Gee, why are you looking for sales? You already know why I'm looking for sales. Elliott wave, right? So, but if I just use the rules that I showed you guys, and this is a valid ABC N wave to the top side, you fib this low to high, okay? Price comes back in, closes below 23%, which is good. And then See how that 23% of mine it won't let it go? Like here, let's say we enter at 50%. Right there. Enter at 50%. Well, let's see how it behaves again at 23. Okay, I'm in good. Oh, this 23% is getting in the way. I don't like it. And that can give us another confirmation as well that it's going to be stubborn. So this is a good example here, Nims, where good entry around the 50. Good, I would say good TP or partials on the 23 or break even, right? Because if we cannot establish ourselves above that, it can give us a bigger reverse. So definitely get. I would recommend get better at of using the fib maybe on the 1 hour or 15 on a good swing, and just see how price likes to walk to. Just see how price moves around the 23%.
No, thank you. I really appreciate
My
that.
pressure, man.
I definitely got to get this recording because for me, and I'm sure for everyone, I know if all of us can master structure at such a high level, then we could really read the market exactly. And I've just learned something completely new to how to really use the fix. So the fibs for me was always a challenge. So yeah, I'm definitely gonna back to. So you said focus on 15 structure and hour, just back testing,
Well,
yeah?
because I just know because you're more of a smaller time frame, like kind of down. So 15 to 1 hour fib is a good one.
Okay, okay.
Yeah, perfect. Let me read your question, Nico, here. Would the fib have helped to figure out how far up the last leg? This one right, the 4 to 5, Nico? That's what you mean, 4 to 5? And you know what? Let's do that. Let's back to this real quick, guys, and then we'll wrap it up here. I want to make sure that I know we can go on for hours, but you know, so this low to high, right? Impulse correction, right? We never, okay. Yes, Justin. This little high, right? TP1s are on right there. It just kept shooting up. There are more extensions beyond that, which we can use. I just don't like to share them too much simply because just sometimes we don't go for trades that long. But check that out, Nico. Okay. So we have the impulse correction. Impulse hovers around 23%. And then it finally makes a decision. It shoots up beyond the TP1, TP2 levels, and that can be a TP3 level right there, negative 618. And then, okay, so now we have the the low. Well, technically, we don't have the high established, but we know it's going to drop. Now we can adjust our fib to these new points. Okay, and you hit play. Okay, price come to the 23 again. Look, 23%. And then it goes back up. So what will be our target be, give or take here? The fifth wave is a little crazy though, Nico. Sometimes that fifth wave, what do you call? Well, I'm sorry, I did this based on the the Elliott wave, but technically, right, this is a structure that you can measure as well. So let me readjust to that. Okay, and this one, that would have been the structure there. The extensions are here, and it just missed that negative 18 if you reverse from there. Okay, reverse from there. Actually, yep, just missed it. Look at that. But in the Elliott wave, that high can just be a wick. That high can just be massive and then go back over again. Okay, go back over, but down again. But because this high did not touch the negative 272, right? Technically, it's still a valid fit, right? And I'm going to show you guys here this example. Perfect. So check this out. Impulse correction, impulse. We don't readjust the fib because we didn't touch the 272, right? But this is a higher low. This price action takes out this higher low, but we still got a bullish push up. You see? So just because if we do get a break of structure, there's opportunity to buy, right? During this day or during this hour, or during that time, simply because when the low gets taken out, you get a pushback up. And even here to the downside, guys, right? If we would take this high, this low, impulse correction, extension, okay? Yeah, not to break. Yep, exactly, the trace, right? Look at this right here, little wick there, and sold down. So it's just about knowing the rules and just giving yourself opportunity to look at this. Let me measure this impulse here. High to low. Okay. Retracement 61%, TP -18. Okay. It just depends on how how you want to see this. All right. I'm gonna do 50% entries, 78% stop loss because it's a smaller stop loss in pips from 50 to 78, then from 50 to 1, TP at the extension. Okay. 2.42 to 1. Okay. 1 point, yeah, 1 to 2, 1 to 2. Hit play. There it is. Surpassed it. Okay, now we can walk our fib down. That was basically a regular break and retest, right? Setup. This is a regular break and retest setup, right? It broke this low. Right there. Break, retest, fib it. Just shy of 61%. And then that happens. Okay. So that setup is done. Just walk the fib down here. Walk the fib up, walk down the fib there. And again, right, you have to try to play the same setup. Break and retest area, 50%, 78. This is where momentum comes in, but that's a different explanation than this. And that's the setup. Hit play. Price said nope, right? Price said nope. And wanted to go a little bit higher. This could be considered just a slight liquidity grab, or maybe even just this, same areas right there, And then from there, the moment it took out that high, the seller stepped in, right? The seller stepped in and just went to town and then brought price back down. Okay. I think we're gonna go lower, but we'll see what happens on during the week. All right, guys. Justin, I'll make a quick graph of it on the Elliott wave rules. I'll type them in and I'll share it back with the chat after we're done with this. But
Yeah, that'd be great if you can share the rules or
we'll do.
yeah, on this. If it's possible, could you do it on like you see how you got the chart here? Like that'd be great because like I said, I learned something new and I'm sure everyone on this call would love to have another session like this dedicated to the Elliott waves or like how to really read impulses because like I spoke to you before about which is I always get caught out, which is I'm always entering on the first impulse, and then it comes back to my ETMs, yeah, and then pushes down again, and I get, like I said, I get annoyed because I'm like, I've just lost, not lost, but I'm not gaining what I could be gaining from the market. So if we could do another session like this, just dedicated to impulses and structure, that would be even great.
Hey man, no, absolutely. That's why we have this inner circle guide for that, and it is structure. Structure is king. So definitely do that. Definitely do that. All right, guys, we'll close shop. Thank you guys for being here, and um, any little updates there, we'll follow up. Just so we can keep it moving for today. So everybody have a great one. Thank you.
Thank you.